To understand what's really going on, let's start with a small three-act movie. Act 1. September 18, 2025. OpenAI signs a $300 billion deal with Oracle for AI computing capacity. Oracle stock shoots up by almost a third, and Larry Ellison briefly overtakes Elon Musk on the global rich list. Now, Act 2. That same day, September 18th, Oracle signs an agreement with NVIDIA to buy chips for that exact OpenAI infrastructure. The deal is worth $40 billion, with room to expand to $300 billion. Markets cheer again, stocks soar. Then comes Act 3. On September 22nd, 2025, NVIDIA suddenly announces an investment into OpenAI worth 50 to 60 billion per gigawatt of compute, with the potential to scale to 300 to 500 billion. And this is where investors start scratching their heads. Let's repeat the chain. First, OpenAI receives the money from Oracle, then Oracle passes the money to NVIDIA, and NVIDIA eventually sends it right back to OpenAI. Meanwhile, all three companies' stocks rise because everyday investors see loud headlines and rush to buy in. NVIDIA, OpenAI, and Oracle quietly sell their shares into the hype, locking in real profits. Again, the profit does not come from products. Nobody has built or released anything. The same 300 billion just got cycled around. All their earnings come from retail investors who pour money into inflated expectations. And if you swap the corporate names for regular people and replace OpenAI with someone like Sergey Mavrodi, the picture becomes obvious. A classic financial pyramid where nothing is produced, money simply circulates inside, and the real losses fall on the hamsters. This is exactly what global media has been shouting about for months. CNBC, Forbes, Financial Times, everyone has published warnings about the massive bubble forming in the market. And whether this is true or exaggerated, that's what we'll figure out in the next couple of minutes. And from you, a like for the investigation and your thoughts in the comments. We hear about artificial intelligence every single day, but few people realize it's no longer a toy, it's a new economy. Entirely new professions are appearing right now. And the most in-demand specialists are those who know how to create and deploy AI assistants. These people save companies millions and earn hundreds of thousands of rubles per month. The online university ZeroPoder is launching a free workshop. In one evening, you'll see this profession from the inside. During the session, we'll build an AI assistant together, one that chats with clients, prepares reports, and reduces staffing costs. What you used to require a whole team is now handled by a single system. In 2 hours, you'll understand why this field became one of the highest paid and what you need to break into it right now. At the end, you'll receive materials and a toolkit you can use immediately. Participation is free, link below the video. Sign up and get access to a profession that already brings in hundreds of thousands to those who master AI. And at first glance, everything does feel like a quiet nightmare. 80% of all US stock market growth in 2025 is artificial intelligence. AI is also responsible for 40% of the country's GDP increase. That's $1 trillion or $2. A sum equal to the GDP of Italy, created in under a year and practically out of thin air. No data centers have been built, no superclusters running. In reality, the entire boom is just the same virtual 300 billion being tossed back and forth between NVIDIA and OpenAI. And millions of people, banks, and organizations are putting real money into this and risk losing it the moment the bubble pops. That's why analysts are shouting from every headline about a possible repeat of the dot-com bubble. For those who were too young back then, here's a quick recap. It all happened at the turn of the millennium, and the story looked eerily similar to today. In 1995, when the internet was just becoming mainstream, everyone believed it was the future. Netscape, Yahoo, later Google, and PayPal skyrocketed and began making real money. Investors went into a frenzy, and basically any company with .com in its name attracted billions the moment it hit the stock market, even if it sold 3 pairs of underwear a week. Everyone had beautiful charts, bold promises, and insane growth projections. If you look at PE, the ratio of market value to annual profit, most .com startups had numbers well above 100, meaning it would take them a century to break even. But people still invested, hoping for explosive future profits. And honestly, there's nothing inherently wrong with that. This is how markets look for future winners.
Tesla, for example, had a PE of 1274 in 2020, meaning it would need to work until the fourth millennium to break even, and yet the business grew and the ratio dropped. The real question is, will the company actually grow? Back then, closer to the year 2000, it didn't. In March, investors rushed to exit the market, the crash began, and by 2002, the Nasdaq had fallen 78% from its peak. Winners included people like Elon Musk, who managed to sell PayPal in time, and other major players. Losers were ordinary people, even those who never traded stocks. The stock market works in a way where profit flows to those it's meant to. And when losses come, banks go to the government. The government prints money, then takes it back through taxes and inflation that hits regular citizens. The movie The Big Short shows this perfectly. The last key part of the dot-com collapse was the role of Cisco. While Apple, Yahoo, and Google impressed investors with products, Cisco built the internet itself. Routers, switches, network hardware. There's an old saying, during a gold rush, don't dig for gold, sell shovels. Cisco was selling those shovels and became the most valuable company on earth by 2000, and then crashed harder than anyone. Now jump to today. The modern shovel seller is NVIDIA, basically a monopoly in AI chips. The gold diggers that need those chips are AI startups, primarily the loudest of them, OpenAI. Its valuation is already approaching $500 billion. And NVIDIA itself is the most expensive company in the world at around $4.5 trillion. If NVIDIA were a country, it would be fourth in global GDP, right behind Germany, which is odd for a corporation with just 36,000 employees. That's why investors are feeling the dot-com deja vu, but there are counter-arguments. For example, as of October 2025, NVIDIA's PE is just 53. Compared to Cisco or Tesla, that's nothing. On the other hand, AI truly is everywhere. Even grandparents use it now, not to mention cars, science, and medicine. And on the third hand, for the first time in history, entire governments are backing the AI sector. So it seems impossible for it to collapse. Right? Unfortunately, wrong. So now we jump to 2008, the moment when Lehman Brothers collapsed. The fourth largest investment bank in the US fell, even though everyone believed the government would never let it happen. But no, the bank went under, triggering the biggest modern financial crisis, one that made the dot-com crash look modest. So government support only means one thing. A crisis doesn't disappear, it just has a chance to grow to planetary size. And if we look closer, the risks don't get any smaller. That low PE ratio of NVIDIA exists only because the company reports massive revenue. But let's check where that revenue actually comes from. The part everyone knows, gaming graphics cards, brings in just 8.7% of NVIDIA's income, about $11 billion. The overwhelming majority comes from a quiet line called AI data centers, meaning chip and server hardware sales to big AI players. But wait, that's literally exactly what we talked about earlier, those same $300 billion. OpenAI gave them to Oracle, Oracle funneled them into NVIDIA, and NVIDIA handed them back to OpenAI. It's like putting cash in your winter jacket, forgetting about it, then finding it months later and counting it as unexpected income. And since you own the jacket, nothing stops you from doing this forever, drawing whatever revenue numbers you wish. And that's the main claim analysts make about NVIDIA. The company bought a stake in OpenAI, owned shares in a dozen AI startups, and recently invested in Elon Musk's xAI. And guess where xAI spent the money? Exactly, on NVIDIA chips, the same shovels. It's like a shovel maker owning the land, organizing expeditions for free, handing out shovels, and asking only for a cut of whatever gold someone finds. In reality, the shovel company would depend entirely on whether anyone actually finds anything. Which is why NVIDIA can be removed from the bubble equation. The corporation is simply feeding the hype and earning on it. But the actual fate of the bubble depends on whether the AI startups themselves will ever make money. And that's exactly what happened with Cisco. The company survived, still makes great hardware, but the hype vanished and the stock price collapsed. And here begin the real problems. OpenAI's net profit in 2025 is minus $8 billion. During the dot-com bubble, at least giants like Google were profitable. Now even that's missing. The biggest AI startup is still losing billions, and Sam Altman promises the first positive year only in 2029. Anthropic is down $2 billion, Musk's xAI is in the red by $5 billion, and Copilot, Gemini, and Llama survive only because they're owned by Microsoft, Meta, and other giants. So despite AI being built into every smartphone, its creators survive on NVIDIA's subsidies and pure luck. Profitability simply doesn't exist yet. Formally, that's normal for a young industry. BYD, founded in 1995, became profitable only in 2003. Google needed 4 years, Amazon needed 9, and Tesla needed 17. For a new market, early debt is standard. But the difference is, BYD builds real cars. Amazon produces basic.
And what exactly does OpenAI earn money from? Honestly, no one really knows. What Altman profits from besides ChatGPT subscriptions. And even that revenue stream is shaky. No matter how many premium models you release, some Asian startup like DeepSeek will roll out something similar for free. Still, from today's $6 billion in subscription revenue, OpenAI promises to grow to $55 billion by 2029. Experts aren't convinced, not with endless free alternatives and the performance ceiling AI models are already hitting. They generate great videos and solid voiceovers, but beyond that, there's a wall. If you upload a fully AI-generated video to YouTube, you won't get monetization. And on the other side, dreams about hyper-personalized ads remain dreams. OpenAI is already drowning in lawsuits as it is. What about revenue outside subscriptions? Here, things turn downright gloomy. OpenAI's future income projections rely mainly on government contracts and, drumroll, collaborations with Oracle, NVIDIA, and other giants, meaning more money shuffled from one corporate pocket to another while calling it revenue. One single image sums up the entire modern AI economy perfectly, money sloshing back and forth. And according to analysts, as of October 2025, this merry-go-round has inflated a $1 trillion bubble. Even AMD joined the game, promising to buy a 10% stake in OpenAI. And Wall Street sees all of this as a closed loop, a rerun of 2008 when banks shuffled mortgage loans between each other until the whole system imploded. The trouble is, the market always works both ways. On hype, it can push stocks to the moon, and on the way down, crush them to ridiculous levels. And in that scenario, everyone suffers. Because in some sense, it would be far better for every taxpayer on Earth if AI didn't turn out to be a bubble. If everything were fine, corporations would keep running smoothly, and otherwise, just like in 2008, it's teachers and plumbers who end up paying for the mess. So what do you think? Is the AI industry a bubble or not? Share your thoughts in the comments. And that's it for me. See you in the next video.